Hey, investors, and welcome to InvestorTV's live panel, Strategic Resources for a Powered Future. My name's Jon Franklin, an experienced exploration geologist and your host. Today, we're zeroing in on one of the most pressing challenges of our time, how to meet soaring global demand for lithium, copper, critical minerals like boron, cobalt, and bismuth in a world where supply is anything but guaranteed. From electric vehicles to grid-scale batteries, AI infrastructure to national defense, these critical minerals are no longer niche commodities. They're strategic necessities. So the real question for investors is this: with demand for critical minerals accelerating, supply chains constrained by permitting delays, geopolitical risks, and capital intensity, where should smart capital be deployed today to capture value in a sector that is both indispensable and chronically underfunded? So we're joined today by a powerhouse panel of CEOs and energy experts who are on the front line of this supply-demand tug of war. First up, Claudia Tornquist, CEO of Kodiak Copper, James D. Calaway, Executive Chairman of Ioneer, Robin Goad, CEO of Fortune Minerals, and Gianni, Kovacevic, investor and modern energy expert. Welcome to the show.
Thank you.
Hello, good to be here.
It's great to have you all here. So, launching into it, over the past year, we've seen drastic shifts in commodity prices from a range of critical minerals. Lithium has come off its extreme highs from a few years ago. Copper has rebounded amid renewed infrastructure spending and revoked tariff threats. And critical minerals such as bismuth and tungsten are increasingly being treated as strategic assets rather than just industrial inputs. At the same time, geopolitical tensions from trade restrictions to resource nationalism are reshaping how countries and companies think about supply security. Gianni, against this backdrop of volatile commodity prices and rising geopolitical pressures, how should investors and industry leaders reassess the supply-demand outlook for critical minerals? And what signals matter most in determining where real opportunities and risks lie in the years ahead?
Well, we have to differentiate government and business. And there's a lot of will, but unfortunately, a lot of times the actual execution is something that doesn't manifest itself. So we had, during the election campaign last year, this propensity to drill, baby, drill. Streamline regulation, increase sort of like production that would be, I'm talking oil and gas, let's say, on government lands and things like this. But by nature, if you talk to the 20 CEOs that produce oil in large quantities in the United States, you have to make money. So at one side, they want to have a low oil price, good for the economy, good for the consumer. And at the other time, they want people to drill more oil to keep that sort of balance going. Doesn't work. Lip service. And the same can be throughout all these different commodities. There's the action has to be there. Where I saw about 4 months ago, like everyone else, they created in the United States this wish list of 10 projects that they would really like to accelerate. These are mineral projects, of course. A resolution in Arizona. We had the Arkansas, the Smackover project that's owned by Standard Lithium. And let's see it happen. It's reasonable if other places can have a permitting process that takes place in a reasonable amount of time and actually make it happen. And maybe underlying some sort of support from the government if they actually want to see these things go forward. A lot of lip service, but not a lot of action. And who are the leaders in most of these things? Of course, China. China gets things done. They build it. They go all over the world. They've done yeoman's work for 20, maybe 30 years. And now they, as everyone knows, this is well publicized, they control basically the production and most importantly, the refinement of these, as you call them, critical minerals. So we'll see. Governments change. We go through an election cycle, talking about Canada, the United States. China does not go through that election cycle. And it's for your program, I think it's about where people are going to speculate, because they are speculators. A lot of these things are not investments, in fact. They're speculations. And I still strongly believe that right now, because the CAGR growth rate for lithium is going to be 15 or 20% for the coming years, you don't have to think too much about it. Lithium is going to have another boom. It's not a question of if, but when, and that when's going to manifest itself, I think, really now in the next sort of 1, 2, 3 years. But that's a commodity I think people should have at the top of their list.
Interesting. Yes. So we're going to explore all of the ins and outs of the strategic minerals market. And you've mentioned a bunch of them with China and the geopolitical situation, governments kind of going to and fro with how they position themselves on them. But before we look at the supply and demand dynamics further, let's go ahead and introduce ourselves to our panelists a bit better. So I'm going to ask each of our CEOs about their projects and give them 90 seconds to do this. So Claudia, you're up first. Kodiak Copper is a Canadian exploration company advancing its flagship MPD copper gold porphyry project in southern British Columbia. Located in a well-established mining district with strong backing from major shareholders like Teck Resources. Tell us a bit more about it, Claudia.
Well, you've given already a very good introduction. Thank you, John. So Kodiak is a copper porphyry exploration company. It's founded and chaired by Chris Taylor. And we have now focused on our MPD project in southern British Columbia for the last 6 years. The project is located in an existing mining district between two big copper mines with all the infrastructure, obviously a big advantage. And we have, over the period of 6 years, consolidated the district, put together numerous claim packages with extensive historic exploration, and over the same time also drilled. And after 6 years of successful exploration, more than 90,000 meters of drilling, we have reached a very important milestone and catalyst for our company this year, which is the maiden resource estimate, essentially where we are putting a number on what we have put together over this period of time. First part of the maiden resource is already out, was very well received by the market. Second part is coming in the fourth quarter. So important milestone to look forward to. And we have lots of other news, exploration results, metallurgy, and further news flow coming as well. So very busy and exciting time for Kodiak's investors.
Very exciting. Thanks for the review there, Claudia. Sounds like things are definitely happening on the end of the drill bit there. So from transmitting power to storing power, we shift from copper to lithium supply. James, your Nevada-based Rhyolite Ridge asset is one of the few integrated lithium boron projects in the world, let alone just in the US. For our viewers who may not be familiar with it, could you tell us more about the project and its potential?
Thank you very much. Rhyolite Ridge is a very large multi-generational asset that has been under development now for almost 8 years. It's unique in that it has in the same production streams that we'll be producing, we'll have very large amounts of lithium carbonate that we produce, but also become one of the largest producers in the world of boric acid. Those are quite two different beasts. One is very dynamic, has a lot of volatility in it, lithium, obviously, where boron is like the most boring thing you could possibly imagine. But I say that in the most endearing way because it creates a very stable income stream. The good news for our project is that the combination of those two being produced, we end up with clearly, strongly in the bottom quartile of lithium production costs in the world with that credit. So it's really unusual and it's unique. There was one other project that had boron with lithium, which was in Serbia, but it's run aground with opposition. But in our case, we actually are finally, after many years of dealing with permitting issues, because we're on federal lands in the middle of Nevada, we were able to get a permit out of the Biden administration in October of last year, and then subsequently received $1 billion low-cost loan from the Department of Energy, which is closed towards the end of the last administration, and fortunately is being supported by the current administration. So, Gianni made a good point, which is all these projects, certainly ours, lives in the juxtaposition of public policy decisions and business decisions. And one of the big challenges all lithium projects have right now is that the current price is not adequate to justify a decent return on investment. So you must find investors or some combination of investors and government support that allow you to anticipate the price. So you need basically counter-cyclical investors, which of course is a harder beast to find because most people want to say, okay, what's the price of your product right now? Where is it on the LME? Can I hedge it, et cetera? And none of those exists right now for the lithium sector. Now, the problem with it is these projects take 8 to 10 years to get them started to development, and there are very few big, good projects available in the world. So we are running, in my opinion, we're running headlong. We don't get on with this quickly. And we are the ones that are able to start construction, immediately for a large project. There are very few of those, by the way. The problem is that we're going to run into a shortfall, and God knows what the price is going to be when you start tying together not just electric vehicles, but also BESS, both of which are very critical. I think you could have a explosive situation. So we think it's very important to tie together all these pieces, and that's what we're doing, so that we can have critical materials, lithium carbonate chemicals produced in the United States and get it done before 2030. So that's what Rhyolite Ridge is going to do.
Fantastic. Sounds like you're definitely playing the long game there and kind of riding out the storm of the volatility in the short term. So heading now from one fundamental part of the battery raw material supply story to another, Robin, Fortune Minerals is a North American development stage mining company advancing the Nico project in Canada's Northwest Territories and Alberta. This vertically integrated cobalt, gold, bismuth, copper project is designed to provide a reliable domestic supply of critical minerals alongside gold as a hedge. Tell us more about the project.
Thanks, John. So we're a Toronto Stock Exchange listed company, and we have an advanced development asset, as you mentioned. We've spent about $150 million on the project today, and we're hoping to take this project to a construction decision at the end of next year. It's an interesting asset. We have 2 IOC deposits in the Northwest Territories, totaling about 60 million tons, but fantastic exploration opportunities because as an IOCG, most of the analogous deposits around the world are in excess of 1 billion tons, and we have that exploration upside. The project is vertically integrated, so it's comprised of a planned mine and concentrator in the Northwest Territories. We'll then ship a concentrate to Alberta's Industrial Heartland Association north of Edmonton. And this is an existing petrochemicals and critical minerals processing hub. So it has virtually everything we need to set up a hydrometallurgical facility that will be producing cobalt sulfate for the lithium-ion battery industry. We have 1.1 million ounces of gold, which is a counter-cyclical and highly liquid hedge. We have the largest deposit of bismuth in the world with 12% of global reserves. And we have a little bit of copper, plus significant additional copper in the satellite deposit as well. And we may be getting into bismuth later in the discussion. That's a really exciting metal. And most of these metals they're 3 critical minerals, but the cobalt and the bismuth are metals that have supply chain concerns from political instability, policy risks, and also ESG concerns. So having a North American vertically integrated supply is going to be very important. Should mention just quickly that we were the first Canadian project to receive the U.S. Department of Defense funding, and we've also received funding, matching grants, or they prefer to call it contribution funding from Natural Resources Canada. And we also have a little bit of money coming in from Alberta Innovates. And we also have a process collaboration with Rio Tinto, where we will take waste products from the Kennecott smelter in Utah and process those in our Alberta refinery. So those will augment our production from our in-house deposits. That's a quick snapshot.
Thanks very much, Robin. So during the panel discussion today, this is a live send, and there's people that are sending in questions live, basically. So I'm keeping my eye on what they are, and whenever they pop up and they make sense, I'm going to answer them. So in this regard, you just mentioned the financing and kind of the institutional investment coming from governments and that. So this question has come from outside. Basically, what about financing? It remains a huge hurdle with many institutional investors hesitant about the mining risks. Do you see more projects depending on government loans, strategic partnerships, or offtake agreements with downstream players, automators, and tech? Question mark. Maybe Gianni, if you'd like to take that.
I wasn't expecting the question to come my way.
Sorry.
Yeah.
Otherwise, Robin, you can feel free to take that one. Speaking of, you're already talking about the government.
Yeah, I think it takes a long time to develop mineral deposits, and typically more time than the average patience of investors. And regrettably, since before COVID, the capital markets are effectively closed for small exploration projects. So I think there is a significant growing contribution going to be coming from governments. We've received about $17 million of effectively non-dilutive funding from governments. But I'd like to point out a project in the United States, MP Materials, which recently secured, I'm thinking, they secured the entire project financing for a rare earth element project, primarily from the DoD. They had a minimum floor price, they had equity investment, they had offtake, and then they brought in Apple as an additional investor in the project. So I think, like any project, you got to look for where the money comes from, and if you've been in the business as long as I have, there's a transition going on from different funding sources, and the historical capital markets are just not open. But I do believe they're opening up now. We've seen really strong price improvements, particularly for gold. That's brought a lot of investors back into the market, and I'm hoping that we're going to see more investor interest in the mining industry.
Yep.
Great answer. Thanks, Robin.
An important point, Robin, you highlight. I think there's a real shift in investor sentiment this year taking place. After quite a few years where there was a lot of hesitation, there's now a lot more momentum. You see companies, exploration companies, financing, a lot of investor interest, and it really feels like the start of a bull market again with more momentum. And it's an exciting time, an interesting time for investors to look at critical minerals and commodity investment opportunities.
You know, I would just like to add to both comments that I draw a distinction between, the cost of development, because, that's a long process as Robin pointed out, and, 20 million here, 30 million there, 50 million there, you can kind of work your way through the long, difficult development process. But you reach a certain point, which is exactly where we are, where, you've done it. I mean, we're completely engineered. We spent $250 million developing this project over 8 years. And, you finally get to the point where you got a multi-billion-dollar decision. And that really opens up a whole new can of worms, because you got to find big capital sources. You can't do it with chipping away at it. And I think that's a different set of problems. So, and for instance, in our case, we fortunately got $1 billion low-cost loan, which helps with the equity side of this equation, because without that, I'm not sure how we would exactly get this done. But we've been in the market right now. We're raising our equity with Goldman Sachs. We've been all over the world over the last months. And I agree with everybody that the sentiment is getting better. I mean, for the first time, people are wanting to take calls, big superannuation funds, all kinds of sovereign funds, all kinds of different players are wanting to take calls for projects that are ready to go. And there is a growing sentiment of willingness to say, we've got to make these investments, because what Gianni, you said at the beginning, there's going to be a big, big problem in the world if we don't get more lithium projects under development. So in our particular case, we're being surprised by some of the interest. Interestingly, biggest surprise so far is just the amount of interest from big, huge private equity firms, which in a way is kind of interesting, because they're would be unorthodox in a way, but they're starting to say, hey, they like to play those games of looking at where the future's going and how to make money. And they're starting to see that, you start building a big project like ours and, right away, start it today, you don't come on stream for 3 years. So what the current price of lithium is really pretty irrelevant when you look at everybody's forecast and it's showing $25,000 a ton instead of 10. So I think that we have to look at future looks. We have to have counter-cyclical investors. We have to have smart money that's not just sitting there saying, well, it's not good today, but it's going to be good tomorrow. And that's what we've been focusing on around the world with Goldman. And I'm feeling pretty optimistic that we'll come through with the rest of the capital and start construction ASAP. Those are different.
Sorry. I was just going to also add the opportunity for customer financing, which is, and offtake, which is, I should have mentioned earlier. And governments are structuring programs where you get debt guarantees. So if you have particularly commodities with supply chain risks, and you have a significant source of supply like we do with our bismuth, it's you're great opportunity for people who really need your commodity to help finance the project.
That's right.
Sorry if I cut
some great conversations there around where the capital is coming from and that it is starting to flow back into it. We mentioned lithium and bismuth and the more critical mineral side of it. Copper kind of deals with two separate uses, the industrial use and obviously the critical metals aspect of it. So if we head over to the red metal again, copper demand is rising sharply. Everyone knows that with electrification and AI demand increasing year on year. Yet the industry is facing one of the weakest discovery pipelines in decades. Claudia, how can exploration companies explore and develop potential prospects more efficiently to fill this growing gap?
Well, there is most definitely a supply gap, supply crunch opening up. I don't think I've seen a single market expert forecast an oversupply in the future, and that's simply a function of there not being many projects, exploration, development projects in the pipeline, and there has not been a very large discovery for over 10 years. And that's against a backdrop of strong demand with electrification, AI, etc. And so there's a crunch coming and more new projects are needed. And the copper projects, most supply comes from copper porphyries. These are big mines that take decades to develop, on average from discovery to production, 20 years and often much more. And that just means if we haven't discovered anything in the last decade, there won't be something new, a new mine to be put into production in the next 10 years. And more discoveries and more exploration projects are urgently needed. And with Kodiak, having a project where we have already a discovery and have now progressed it to resource level, that puts us in a very good position. And I can certainly say from firsthand experience that all the big players in the sector, the big copper companies, the big gold companies, they are really looking for the next good copper project.
Absolutely. So as a follow-up question to that, presuming we're at the point where there just aren't enough good new copper projects coming online and the lead time is 10, 15 years, does that make the existing projects that are close to coming online or those that already have drilled resources even more attractive?
Well, it's certainly a good place to be, to have a project that has a resource already, because, that's essentially 10 years into the 20-year lag that it takes to really put a project into production. And there are not many of them around the world, and more are urgently needed.
And then how do we keep the funds flowing into the greenfields exploration of finding new ones? Where do we find the balance, I guess, as far as developing existing projects to meet the supply-demand gap now versus filling that gap for future generations?
What you typically see is in the market or in a bull market, and I think that's what we're seeing now, that it's the large and producing and close to producing assets and companies that start rallying first, and where the money and the attention flows first. And then it trickles down to the junior sector and to the more early stage and exploration stage companies. And you can see certainly a lot of attention, whether it's from government supporting projects like in Canada with their major projects list, supporting the most advanced projects. And you see high valuation in those companies already. And the juniors, they have started rallying now, but it's only just trickling down. So from an investor perspective, I would argue it's a very good time to look at juniors because you can still find cheap shares that are undervalued and have a lot of potential to create great returns as the market looks more and more also at earlier stage opportunities and realizes that this pipeline needs to be filled.
Absolutely. It's easier for us and the CEOs of the companies to obviously be biased against this. But if I shift that question over to Gianni, do you think that the big M&A cycle has kind of coming over its crest now and that money's going to be flowing into the smaller end of town, or do you think it's still a bit early days?
Now you're in my wheelhouse, John. Sorry, the last time I was expecting that question. It was a lead into Robin because of what he was commenting on before. But there's two things that are going to happen. So let me show you how I think the movie ends with respect to copper. We do not have enough copper to electrify the world like everyone is talking about in the next 20 years. So if the CAGR growth rate for demand growth in copper is around 3% or 4%, and it's really done that since 1900. Okay, so we know that's pretty reliable, but when you start having a little bit more electrification, to say it's going to be 3 or 4%, I think is, that's a pretty safe place to go. We don't have enough copper. So what's going to happen is at times we're going to be substituting more aluminum for dumber applications when big projects are then contemplated the way we generate, transfer, or utilize electrification. So it's going to be, the price will be dictated by China. China consumes more than 50% of the world's copper, and they do not celebrate a high price of copper. So the reason that the price of copper has these really spiky highs and then sometimes rolls over every time, and it's really pushed by the speculators, people that actually do not use the copper. They're doing it for financial purposes. But China's gotten very wise to this. So they're able, for their own purposes, smooth it out. And the last time the copper price climbed, they told the market, and they can do this. No, it's manipulation, but they told them, we are going to be selling 20 and 30,000 ton lots to the market. Why? Because the 2 years before that, China bought and bought and bought. And they have what we have in the United States, the petroleum reserve. They have a copper reserve. And they know the price is going to roll over. They know that. They're very sophisticated now. So that we will always expect that the copper price is going to climb a wall of worry, roll over every time. So the second part of your question is, where's the money going to come from? Is it going to trickle down to the juniors? Yes. You cannot underestimate these two emotions, fear and greed. Right now, there is greed in the system. People that, like everyone here goes to these shows and you can see the sentiment. Sentiment is very good right now. Shares have done well. Gold is now at an all-time high. Many commodities are either at an all-time high or flirting with an all-time high. People have made a lot of money owning juniors. You could attest to that. People that, not just your own companies, but if you take a basket of 20 or 30 good quality companies, they have money to play with. People will re-speculate. And it usually, traditionally, I've been following this, I told you, coming on 30 years now, you're able to do financings now. I think you're going to see some financings that maybe people thought would not be possible. Even companies that, as Claudia said, do not have a resource. They're going to go through that painful, exercise of trying to actually find something. And a lot of money is going to go to money heaven, but it will enter the system. People have confidence. When billions of dollars are made by these junior mining junkies, a lot of that money circulates back into juniors. So this will continue, I think, definitely, probably through the balance of this year going into 2026, in my view.
Really interesting. Yeah, it's there's a lot going on there. And obviously with the cyclical nature of it, someone's got to get burnt at some point, but it seems like sentiment is still extremely high. So stepping away from copper and more towards critical mineral metals more broadly now, Western governments are stepping up support for critical minerals development, as seen in the US Department of Defense's recent partnership with MP Materials that was mentioned previously about the rare earth magnet independence and also setting a floor price. At the same price, NATO defense spending is rising across the globe. The US Defense Logistics Agency is stockpiling metals like cobalt and bismuth, and China has used export restrictions to flex its dominance in key minerals, causing ripple effects from defense supply chains to AI data centers, just like you mentioned, Gianni. Robin, against this backdrop, how should we think about the role of critical minerals in national security and industrial resilience? And what does this mean for the urgency of building diversified domestic supply chains in North America and other allied nations?
Well, that's an interesting and open-ended question. Certainly the DLA is or Defense Logistics Agency is purchasing stockpiles of both cobalt and bismuth. There are two stockpiles actually, or tenders that have been put out by DLA, and also these investments in projects have been prioritized for really dealing with supply chain resilience and security. So if we look at our project, the cobalt is primarily used in batteries, but it's also used in super alloys for jet engine turbines, for cutting tools, catalysts. The bismuth is a metal that probably most people have never even heard of, but a really fascinating metal that is traditionally used in the automotive industry for glass coatings, steel coatings. But it's come out fairly recently that there are some essential electronic functions, so use in new technologies and defense. When China cut off the supply for 5 critical minerals, bismuth was one of them, and the Magnificent Seven companies were all screaming for, we can't build artificial intelligence data centers without bismuth, because you need the electrical interconnects are bismuth because they have high electrical conductivity and low thermal conductivity. So very important in semiconductors, but also in essentially the solders which provide the interconnects for these setters. The defense applications, directed energy weapons, new market application is manganese bismuth magnets are resistant to heat. So they are essential for turbochargers, their electric vehicle drivetrains, F-35 avionics, smart bombs, ballistic missiles. There's quite a number of important defense applications. And we were caught flat-footed because we didn't have access to those materials. China is responsible for 80% of the bismuth mine production, 90% of refinery production. If we go to cobalt, about 75% of the mine productions in the not-so-democratic Republic of the Congo, and the China controls more than half of that mine supply. They control 80% of the refinery production, 90% of the cobalt chemical supply. So we have to have a North American supply chain, and that kind of segues into the importance of midstream processing. If we don't process these materials here domestically, then if you simply make a concentrate and ship it off to Asia, you've lost custody and control of those metals, and you also lose control over the byproducts. So we have to have more midstream processing here in North America, and that's what we're trying to accomplish. And I think that's why we were successful in getting government support for our project.
So there was a question I was going to ask later on, but you've kind of you've jumped ahead, and I might as well ask it now. So we've been discussing finding these deposits and mining them. However, another huge part is obviously the processing part of that puzzle. With export restrictions on critical minerals now a recurring theme for countries like China and the DRC, as you mentioned, the geopolitical contest over strategic resources is no longer really about who controls the deposit. It's increasingly becoming more about who can actually refine them and process them. So how do you think vertical integration will play a more prominent role in company strategies across the board in the future?
You want me to take that one?
Yeah, go for it, James.
Oh, sorry.
Oh, the reason I've raised my hand is that from the beginning, our purpose was not to be a concentrate producer or shipping like the spodumene guys do, shipping it over to China for processing. At our plant, we're going all the way to final materials that go into the cathodes for the batteries. So that's a very important thing to do. And interestingly, if you look at CapEx, if you look at the CapEx for a project like this, it's about 15% is the cost of the mine, okay? About 85% of it is the cost of the big processing facilities to purify and get to a final material. So that's what we're doing, both in lithium and boron. We're delivering final materials to the market. So I think that's important. But interestingly, it's maybe not enough. I mean, everybody likes to talk about that distinction of raw materials or semi-processed going into China, getting processed. But the Chinese are exhibiting some new characteristics. And I think we need to know about this. And at least in the case of lithium, is that you have fully integrated companies like CATL that have all the way from owning mines to processing of the materials to making the cathodes to making the batteries. And so in a way, what they're doing is they're able to select where they're going to make their profits. And quite frankly, I think that there's a concerted effort on the part of the Chinese, and it's a smart thing to do, to use that consolidation of the full stream. Basically, they basically say, okay, we like having lithium prices below replacement cost. Even if we're losing a little money there, we don't care because we're going to make money by selling the batteries. And that's exactly what's going on, in my opinion. And I think data, if you look at it carefully, will support that. So I think we have a bigger problem in the United States and North America. It's not just going from raw materials to semi-materials, sending them over. We can solve that, but we actually have to have a complete supply chain. You know, right now we're very short on, we don't have anything really in cathode manufacturing for batteries. Well, if you don't have cathode manufacturing, take the raw materials and make cathodes in volumes, it's very difficult to have a battery plant that you can say is domestic. So I think that a lot more have done exactly that. They've developed the full system from front to end, and good power to them. I mean, everybody likes to say terrible things about the Chinese. I'm just marvel at their ingenuity. I mean, I've been in this business for 17 years, and they were right there with when I was starting up Alaraz in Argentina. I mean, they were all over the world buying up resources, and they've invested incredible amounts of money, and they have thousands and thousands of engineers devoted to the electrification and transportation and other things. By the way, that's another problem we have in North America is we have policy now that basically is saying, at least in the United States, not in Canada, so excuse me, Canadians, y'all haven't done this, but we basically have a policy that says, and Wright, the Secretary of Energy, says it. He says that we don't need to worry about climate change. I mean, it's an issue that's there, but we have lots of time to address it, which runs counter to the knowledge that we have from the scientists around the world. But that's a terrible backdrop to encourage the production of a full supply chain, because we were heading towards very rapid building of the full supply chain. And then the new administration came in and said, look, we said, drill, baby, drill. We don't think climate change is an existential risk of any consequence. And all those kinds of things, and I'm not trying to be political here. It's just that's what they say. And that doesn't encourage. And then, we had this recently where the Koreans had the courage to come over here and start building a battery factory. And our immigration policy led to 500 of them being arrested and shackled and sent back to their country. I mean, I can't tell you how much grief that I've heard from the Koreans and the Japanese about that. And I deal with the Koreans and the Japanese, the cathode makers, the battery makers. They're very upset about this. I mean, it sends a terrible signal. So I don't know how we go about. It's not just about mining. It's not just about basic processing. It's about the full supply chain. And we're falling very rapidly behind in this regard. And I don't know how you go about fixing it, but it may require both private and government in a big way. But I don't know if government's supportive of that objective.
So, comment points onto that. Sorry, John. Guys, I think James touched on something that's very important. Vertical integration is expensive, and very few projects have the critical mass and the cash flow to be able to service the debt from vertical integration. So for our project, you're looking at probably something in the order of 40% of the capital costs is for the mine and the concentrator, and 60% is for the hydrometallurgical facility. So but on the other side, once you've built that facility, it's got to build it and they will come. And we've demonstrated that through the Rio Tinto collaboration. Rio Tinto had this byproduct that was essentially waste material, and they reached out to us because we had the process knowledge as well as the facility being constructed to be able to take that material. The other, just touching also on, China has been proactively investing in critical minerals for 30 years. They got a big head start on this thing, and they acquired a lot of the best projects, particularly for cobalt in the DRC, and this are deliberately overproducing, and just reinforcing what James said. They can take a loss on the mining if they get the profit return on either making batteries or cars. So we've got a bit of a disconnect. The economic principles that they're operating on are not necessarily the same as ours, and we have to find solutions for that. So going back to that MP materials, there was a floor price, and those kinds of government initiatives are probably going to be required because we're not playing on a level playing field. So it's anyways, that's just another comment.
I'm sorry, I got to just 10 seconds on it. First of all, I think that if you just said competition, they're out competing us. Okay, let's just be honest, they're out competing us. All right. Some people like to say that's some kind of evil plan by the communists to take over capitalism. I look at it and say, my God, they're killing us. They're working 6 days a week, 12 hours a day for a third of the cost that we charge for our people, and they're working themselves to death to produce the best materials. I mean, the solar panels, the best batteries, the best electric cars. I mean, they're committed, and I think we need to quit having them as the boogeyman. Okay, I think we just got to decide whether or not we want to compete. If we want to compete, by the way, I agree with you, Robin, that one of the best solutions that becomes less selective is, okay, we want to have a price that allows us to build these things in the United States or in Canada, and that probably is going to create some floor price supports in order to make that work. And I think that MP is it's maybe a one-off thing. By the way, it's not so clear, if it's deliberate for the long term, but it's not just the Department of Defense; it's Department of Energy and other places. I do think we're going to need to have some floor support for certainly lithium, and I suspect for some of the other, maybe not copper, but for lithium and other battery materials, specific battery materials, I think we're going to probably need it.
Just on that point, it's only the Department of Defense that can invest in the Canadian project. The DOE the capital pools are not available to Canada.
I hadn't thought of that. Thank you, Robin.
Yeah, it was very interesting what you said the other day, Robin. I didn't realize Australia had been linked to that list as well. So it's quite a bit of listen. It was the United Kingdom as well. United Kingdom.
Yeah, it's linked to our defense relationships. So I think the legislation was actually put in place in 1985. We were the first recipient of a grant under that program, and it's so for defense purposes, Canada is considered domestic. And that has now since been expanded to Australia and also to the United Kingdom.
But up till now, up to MP, really, the DOD's stuff has been small potatoes. I always was surprised. I'd go to the Pentagon trying to think they had all the money in the world, which they do. I go over there and you sit in these poor offices where they make you put your phones up into a box. And these poor guys, you say, well, we really need to have your help. And after they act smart and everything, and then they tell you that their total budget's $55 million and they've already distributed most of it to universities, and you're sitting there trying to come up with $1 billion. So, but MP was different. It demonstrated the possibility that the DoD could play a material role in large-scale projects. And it'll be interesting to see if there's follow-up. I think it'd send a good signal if there was.
So we've discussed a lot about the geopolitics, and we could really go on a lot further because there's a lot to unpack there. But if we shift now back towards investor sentiment, and one thing that I find quite interesting, and I wanted to touch on, there seems to be a valuation disconnect, Gianni. So when it comes to the resource industry, and especially the critical minerals industry, mining companies remain deeply undervalued compared to tech, despite being indispensable to the energy transition, allowing the tech actually to thrive. Do you see money heading upstream towards the mining projects from these more tech speculators, or do you see the general investor sentiment kind of changing towards mining?
Well, oddly enough, that was a bunch of Silicon Valley guys that got the MP materials going. I think you guys could remember when this American guy that made a lot of money in tech, it took that initiative to move it forward. Probably not so much, unfortunately. It's a really specialized field, and we are also suffering sort of a 20-year vacuum where young people did not take an interest in mining. You know, like we went through all these other booms that happened, and then the crypto boom. So when I was a younger person, we go to these conferences and we would buy shares and speculate and get knowledge. We actually knew the difference between what was going on, and we go through a cycle: make money, lose money, make money, lose money. They just never participated for 20 years. They're gone. They're not getting involved. No, maybe at the margin now to speculate because gold is doing very well. And I think like what we witnessed in the 2005, 6, 7, up until about 2011 period, there was hedge fund money that invested in mining. But those guys, they can help you, but they're very smart, and I would say they're very dangerous. They're not stupid people. So they can outstructure the smartest mining guy, or most of them. So, and if they come in, it's going to be for a period of time. They're going to clip their coupons. You know, everyone's going to pay their pound of flesh. They're not going to be there for 20 years. You know, so how much they're going to help us? So it really comes down to those people that have the skill set. Money has now been made, as I said before, so some of that money is going to get rotated in. But if you look at the long period of time, if we analyze, I did this about 3 years ago, where I went the period from 2003 to 2023, 20 years. And I was basically going, are we climbing a wall of worry, or is there euphoria? Or is it something that's negative, not positive? When you calculated quarter for quarter, 20 years, there was about 3 years of euphoria and 17 years of either climbing a wall of worry, despondency, capitulation, boredom, illiquidity. And that's really, I think, what we have to look forward to in the next 10 years. Fortunately, right now is a good time. This is going to go into 2026 and past that. But until you actually really make something happen, because most of these companies are not going to go through development for all the things that the gentleman and Claudia just talked about. There's no money. And in the long run, what happens? If a project doesn't get developed, it misses the cycle and the shares go down. And that's something that people have to brace themselves for. So it's not going to be 10 years of amazing times. It's going to be a little bit of good times, climb a wall of worry, good times, climb a wall of worry. And right now we are in a period where capital can be formed and money is going to be put into some of these projects, but people have to be very, you have to be a realist as well, I think.
You just spurred me on for my next. Sorry, go for it, Claudia.
Put in there on your questions about new sectors coming into or investors coming into the commodity space. I would say that definitely companies and sectors that look at the commodity space that 10 years ago wouldn't, whether that's the automotive companies, the Stellantis, Fords, General Motors of this world, who all of a sudden take stakes in commodity companies, whether that's in copper, whether that's in lithium, or also in the tech space. I've just recently seen a deal where a crypto company took a share in a royalty company to get their hands on the gold. There are AI companies who now explicitly focused on exploration, copper exploration, because they realize if we don't find the copper or other commodity, then there won't be any there to build data centers or electric vehicles. And I find it's an interesting development that these new investors are coming into the sector. I would expect to see, particularly from the tech side, more of it. And I mean, if you compare the orders of magnitude, the size of tech firms compared to the size of commodity companies, if even only a small share of that money sort of makes its way into commodities, that could have a very big impact.
By the way, I agree with you, Claudia. I really think that the phenomena of AI is something to behold. I mean, all of us that have been lucky enough to have some money to put in it over the last few years have been stunned by what's happened, and the amount of money flashing around in the trillions of dollars gives them so much excess cash. I mean, they don't even know what to do with their money. They're raising their dividends, they're buying back shares like crazy, and they're spending hundreds of billions of dollars a year on infrastructure. So I do think that if they begin to think, and maybe we should be doing more about this, we begin to realize that their future may be have some risk assigned to it by not having the materials that they're going to need. I do think that there's a chance that some of the more enlightened ones will start doing it. And you start seeing it a little bit now. I mean, like you said, there have been, for instance, some crypto funds that have invested. That's beginning to show up. I do think the oil and gas industry, for instance, is stepping up, trying to do the smack over in Arkansas. And I think that it's possible that some capital coming out of the tech boom could find its way here if they become convinced that it's relevant. Now, let me just say this as a general proposition. The problem is they don't really like being in the mining industry. They see it as dirty. They see it as, not consistent with their values. They like to have the output, but they're not necessarily anxious about getting in the middle of it. So I don't know how that'll play out, but I wouldn't be completely negative about this idea.
I think we're seeing some fundamental change in regulatory issues as well, which I just haven't seen for probably 10, 20 years. Governments have been very adversarial for compounding layers and layers of uncertainty, permitting outcomes that are uncertain. And now over the last few years, I've never seen government alignment that like we have today, where we need this stuff and we need to support it. And it's so historically, I mean, the mining business has been capital intensive, and the returns haven't been competitive with technology. But I think we're coming into a very attractive bull market right now for commodities, and particularly for the ones that are needed in technology.
Staying on the government and where they fit into the role of both manipulating these prices, but also keeping them above a certain level so that everyone can keep the lights on. If we look more closely at lithium specifically, so tariff regimes, shifting trade policies, and inconsistent government signals, sometimes promoting the EV revolution and other times pulling it back completely, they create enormous uncertainty for capital-intensive industries like mining and processing. James, in an environment where large industrial investors crave certainty to commit, how can companies and governments work together?
All the people that work in the domestic United States, our necks are broken right now trying to figure out what we're dealing with. I mean, we for instance, I'm facing getting ready to do an FID at $2 billion. And people ask me the question, well, how are you dealing with the tariffs? I just kind of look at them like, well, which day? I have no idea, from day to day where my suppliers are going to get hit. So it creates a lot of uncertainty. And then, of course, we went from a hyper-focused government determined to bring electrification forward to a government that didn't just go to I thought maybe that the Trump administration would take sort of a neutral position, just say, okay, we're not going to provide the subsidization, but we'll let the market forces fight it out. But it's really gone to a more of a direct hostile intent. I mean, it's basically trying to stop this revolution in electrification of transportation is a more accurate description. And I look, I'm not trying to be critical. I'm just speaking the truth. And you can just look at the own words of the government. It's very hostile. And so I think that clearly first of all, you have to have a world quality project. I mean, if you're going to get one of these projects built in the United States, it has to be in the lower part of the cost curve, which, by the way, I think we have the only project like that in the United States. By the way, most of them are going to be at 10,000 and above, and we're at 5,000 total production costs per ton of lithium. So I think you're going to have very exceptional projects, and you're going to have projects that are very, very well developed and fully ready to build. I think that a few of us will get through, but it is not a great environment for solving the problems we're talking about. And I'm really worried about some of the guys. The Koreans, next to the Chinese, I think the Koreans are the most innovative of the bunch. And they've been investing like crazy in this area. And it really upset me to no end that, they're coming over here and spending $2 billion in Georgia to build a battery plant. And, we in our infinite wisdom decided to go and arrest all these poor people. I mean, can you imagine the loss of faith in Korea? I mean, they're people of great pride, and I've dealt with them for years, and this has got to be such an insult. So we're doing a lot of things wrong. We're going to need to get our act together, and hopefully Riley Ridge will play an important role in demonstrating American capabilities. But there's not a lot of us, so we need to get. I think Gianni said, we either get on with building it or not. And we're at the point where we got to go build it. And we're almost there, but the environment has not been helpful. Not helpful.
Yeah, I have to say my take on the political context is a more positive one. As much as I agree that uncertainty and the political back and forth hurts, if I look around the world, then I see more support for mining and exploration from governments than I have certainly seen ever before in my 25 years in the industry. There are lots and lots of governments, whether that's North America, Canada, Europe, that are now all of a sudden talking about minerals and critical metals and talking about accelerating permitting, accelerating building of mines. How can we get that supply? And governments just realizing the strategic importance of those commodities. And I mean, it comes back to what Gianni said right at the start, how much of that talk will translate into action. But I'm an optimist. I think some will, and I can certainly see some positive developments where we are in Canada, where they're addressing slow permitting, et cetera, and really supporting the industry. So I think overall, the climate is a positive one and very supportive of commodities and copper and other critical minerals development, because there's just a realization we need them and they're strategic.
I hope you're right, Claudia.
Absolutely.
Just two comments on the energy transition. We obviously compete in the global economy, and what happens necessarily in the United States is not indicative of what's happening in the rest of the world. We've got adoption rates of electric vehicles that exceed 50% in China. You take a country like Norway, it's something like 80% or 90% adoption. Electrification is superior technology. And when we get over this range anxiety issues or some of the changes in technology, we're seeing a lot more PHEVs now, plug-in hybrids, where we have an integration of electric engines as well as small internal combustion engines operating sort of together. This is happening. The other comment I would make is people forget that the energy transition, the word transition, it's not a switch. We're still going to need hydrocarbons, and we should use hydrocarbons. We just have to use them more sustainably. And I think, for example, natural gas is just a fantastic segue into nuclear. But so where am I going with this? These comments is electrification is happening. It may be happening a little slower in in North America, but it's happening. And then we still are going to be using some traditional fuels as well, and we should accept that.
Since I always have to say something here for real quick. I've devoted my life to building up the capabilities to support electrification of transportation. I mean, I'm as devoted to it as anybody you've ever known for my last 20 years, and I've had an impact on it. I agree with you that around the world, there's a lot more bullishness about it. All I'm trying to say is that in the United States, okay, we would be naive to assume that the current conditions are supportive. I mean, they're removing the subsidies. They're stopping the funding for for charging infrastructure, which is critically needed. And they've for what reasons I don't understand have been openly hostile towards electrification of transportation. This is, in my opinion, is a big mistake. Okay. And I hope that they come to their senses about this, because electric cars are better than gasoline cars, period. And they're going to get better and better and better. And we're going to be on the short end of the stick. We don't get on. And that's why, by the way, General Motors and Ford and other American car companies aren't giving up. Yeah, they're pursuing it. So I'm bullish about it. I'm just saying that the conditions right now are difficult in the end use. I do agree with you, by the way, Claudia, though, that for some reason, it seems almost inconsistent, that there's a bullishness and support for let's go get the critical minerals, but for the application, we're not supportive. I don't understand that. And I'm not smart enough to know it, but somebody needs to explain it to us. That's all I was trying to say.
So while we're on the EV thematic, the EV sales and battery storage use cases are still growing, as Robin said before, despite maybe not growing as quickly as people originally thought a few years ago. However, the metals themselves that go into the batteries have come off massively in recent years. And if we take a look at the charts, we can see that lithium, cobalt, nickel all peaked in 2022 and have had a pretty rough run since then. Gianni, what do you think's going on here?
Well, at this point, I think it's quite clear, as the gentlemen were saying, if they're vertically integrated, they can choose to lose money on the mining and make it up elsewhere. It doesn't seem logical to me that a good portion of the people that produce lithium every day don't make money. They don't make money. And some of these cases, they're being subsidized. Just keep the operation going and we'll make up the loss. That's not sustainable. So that in the long run, that's going to work out. But also, lithium never had any business being 80,000. I mean, never should have been there in the first place. And so you have this, people see that, and obviously we saw what happened with all the lithium shares, which is where people should be looking at. If you are a speculator, you look at lithium and the LIT, which is this index in the United States that tracks the lithium industry. It basically bottomed out at about 31.50. It's now trading at 52. So it has turned. The price has turned, and we're going to have less confidence, I think, in that sort of fake price. It's a very opaque market. I think when you start to see a more mature market, which is where it's going, maybe a strong futures market, and if and when some of the bigger governments actually do underwrite or secure a price for a more realistic price for, let's say, 75% of the people that wish to develop a lithium project, meaning they have feasibility. And if the number is 20,000, if the number should be 20,000 for 75% of these projects to actually go to development, one can at least sympathize with, okay, let's use that as a 20-year price with a bit of inflation on there. And that maybe should be where the economics are put into it. And then if the government can underwrite that price for their own domestic consumption, we're talking about the big automotive manufacturing markets like Germany, France, United States, Canada, Mexico, and it's totally separate from this this fake Chinese price that we're getting in the market. I think maybe James could probably articulate it a little bit as well.
Well, I agree with what you said. By the way, I think that the way we should look at it is most A-quality projects. There's just a limited number of these, but the very best projects like ours and a couple of others around the world those projects need they need to show that they can pencil out at $15,000 a ton. Okay. I mean, that's as low as it goes. If it's $10,000 a ton, nothing really pencils out. I'll just tell you that. But where there's a balance, a healthy balance, is somewhere between $20,000 and $25,000 a ton, is a price that supports high quality projects and brings in some of the secondary quality projects too, which we're going to need as well. So I think that's the target, is somewhere between 20 and 25,000. I agree with you, Gianni. You go up to at least $80,000, actually created all kinds of problems, and the industry loved it, but they shouldn't have. They should have been very concerned about those hyper high prices. We don't need those kind of prices, and they're not supportive of expansion of the use of lithium, whether it's in storage or in cars. So that's kind of where we are. Good projects need $25,000 a ton to be healthy. Not absurd returns, but sufficient internal rate of returns and MPVs to justify the billions of dollars that we have to spend. That's really where it is.
We're just looking at the time here, and I'm thinking, as a final discussion point, we've mentioned that the prices do have to go up, and they've obviously come off a huge amount. Lithium is in particular, but obviously cobalt, nickel, and even copper to a certain extent. Do we think we've hit rock bottom here as far as these critical metal prices, or do we think there could potentially be some more pain to come before the good times? Anyone can answer that.
Just quickly, there's a rule in commodities. Running out of a commodity doesn't matter until it matters, and then it matters a lot. So if you have, I don't care what you're talking about, hogs or logs, if the demand growth of a commodity is 15 or 20%, and then in that commodity, like we're talking about lithium, and you cannot build a new lithium project, basically like 90% of these projects cannot be built at this price. So you have, insatiable demand for the product, and no one is, it's inevitable what's going to happen. The only way that's solved is with what's going to be a higher lithium price. And so, it's the same with all these commodities, but this particular one, it's rare that we've seen that kind of a trajectory. Whereas if you saw 15 years ago, there's a chart with all the bubbles, the most important, most valuable commodity would be oil, copper, gold, things like that. Lithium was a dot. It just didn't matter. It wasn't used for these things. Lithium is becoming one of the most important commodities, so important that it's going to be 15% of Rio Tinto's entire business. That's how important. They have the 3 divisions now. They put aluminum with lithium. So it is becoming a mature market. And with that will come, as I said before, a stronger or more visible futures market. And with that, it's going to remove a little bit of this ability to sort of manipulate the price like it is right now. And that's coming right now in real time. And that'll I think augment into the juniors, particularly in the lithium juniors.
I just say that the best cure for low prices is low prices. So that should sort of. So what were you going to say there, James?
I was just going to say, interestingly, my first lithium production is now part of Rio Tinto. The best piece of production they have is Alaraz, and I developed that. So I thank you for bringing that up. It's a little weird to have that happen, but I think that the one of the things also that I think we should be mindful of is that the easy pickings, the low hanging fruit, the Salar de Alaraz, the green bushes, the great easy great production. Most of that's been found. Okay. There's not, we have a few like Ora Cobras, Ioneer's Rhyolite Ridge that are world-class long-term reserves, but they're far and few between. And even if you took everything that people are proposing, most of it is sort of second tier compared to those things. So it's actually a more bigger crisis. We've got to have prices rise because you really have trouble bringing on second tier, and you're going to need second, probably third tier in order to have the volumes that you need to support what Gianni was just describing. So I do think we have a crisis coming. It's coming sooner than people think, and I think people are beginning to worry about it. I mean, I don't think that it's like you said, it hasn't happened yet, but But certainly smart money is thinking about it like you are, Gianni, and starting to get quietly fairly concerned. So maybe that will be the catalyst to bring on some cash to support, the investments.
Mining is a cyclical business, and we're also price takers. The trick is when you're planning the consumption of your resource or the utilization of your resource, you need to plan it over a minimum of 15 years typically. So you have 2 up cycles and a down cycle. And if you're fortunate enough to hit an up cycle when you're commissioning your project, all the better. With our project, we're also very fortunate to have 4 metals. So we have lower cobalt prices than we'd like to today. But when bismuth was cut off from China, the price went from $7 to $40 per pound, settled down at around 16 right now. And the million ounces of gold we've got, there's 5 billion Canadian dollars on the ground with just in situ with the gold price. So having a polymetallic deposit and exposure, counter-cyclical commodities as well is really helpful.
Absolutely. It feels like that is the red line that's connected everything here is really just having a bit of diversity within your portfolio, because you just can't pick these things and being able to survive through the downturns, not just the good times. But so just wrapping this up, so we've mentioned a massive amount. We've gone from geopolitics to kind of capital flows, the prices themselves, and how we can find more of these critical minerals. I just want to thank each of you for coming on board today. So Claudia, Gianni, Robin, and James. Is there any final comments that anyone wanted to get out there?
Well, I got some final comment, and I think with wrapping it up with a little homework for people that want to hear the perma-bears changing their mind. So I think people also should be looking at direct lithium extraction as it's going to be important. It's basically all channels, salars, hard rock mining, but also direct lithium extraction. And Joe Lowry, who does the Lithium podcast, he interviewed Chris Dernbos about a week ago. And he was always a perma-bear on DLE. Now, I listened to that podcast twice, and Joe Lowry, I'm quoting him because he said it, he's changed his mind on DLE. He's seen what companies like Exxon and Coke and all these big companies, what they've done, where they're going. It doesn't mean it's going to be all parties, like I said, hard rock, salar, and DLE, but that is very telling for me. And so there's a risk reward where I think lithium is somewhere where people that have made money in gold are going to rotate into lithium. But then look at the differential between a company like Standard Lithium, 800 million Canadian market cap, E3 Lithium, 100 million market cap, and Lithium Bank with a 20 million market cap. Really much of the same. Those gaps are going to close. So I think there's an arbitrage there. So a little bit of extra homework there for people if they like this theme, and from really smart people.
Fantastic. Well, thank you all for coming on today, and look forward to catching up with you all again soon.
Thank you.
Thank you, John.
Thank you.